Welcome to the Hard Money Show, where we talk about real estate, home loans, and media. Thank you guys for being on today. This is a solo podcast today. Hopefully you guys find it interesting. I am very excited because I am celebrating my 2-year anniversary with Orbit Home Loans. That's right, 2 years. I know that may not seem like a lot of time to be in the industry, but I've been in a very advantageous position to where I've learned a lot very quickly. Not everybody is, as lucky as I've been to be able to fall into a place where I work hand in hand with a broker who not only owns a real estate brokerage, but owns a mortgage brokerage, who works both of them, who does transactions in the industry and has over 20 years of knowledge that I've been able to kind of soak up. And so I thought that it would be pretty fun to talk about the last 2 years, what that's looked like for me, and not just on the mortgage side, a little bit on the real estate, kind of my development. And then I thought that maybe we could spend a little bit of time talking about some questions you should ask if you're considering buying a house and you're looking for the right brokerage. What are some common questions that you should consider? And so I'm very excited to be able to kind of jump into this. So I didn't intend to get my real estate license, and you've heard this in the past, and I didn't necessarily intend to get my LO license. This kind of just happened by happenstance of getting into the industry through media, right? That's what my background is in. I have sales background. I have brand consulting background, with a lot of development in videography, photography, editing, kind of all of that encompassing thing. And so, I was a little reluctant to get my real estate license, and I ended up getting in. And I got that, I guess, about 2.5 years before I got, well, 1.5 to 2 years before I got my LO license. And so I had some time to work there, had some time to gain that experience, and it wasn't that dissimilar from what I had experienced in the past, right? Real estate is very much, if you've done sales before, it's very similar to that, right? If you're good at sales and you understand how to do, person to person, how to create relationships, how to provide information, and more importantly, how to provide high level service, it's not that different. And so I felt very comfortable stepping into that role. Granted, the education was another thing, but I learned it. I passed my exam, and I felt very familiar, felt very comfortable. Now there's always a, transitional period with learning how to do the sales for that actual career or that actual job. And so, there was some growing pains with, how to do transactions and how to guide people correctly, how to work on the MLS. But I was lucky to work hand in hand with my broker, which I have since the day I started. And I've had a very lucky that we work together almost every day or every couple days. We're in communication. And so I'm a bit spoiled in that way. Unfortunately, not everybody gets that sort of, hands-on involvement. And I was just very blessed and lucky. And that's one of the reasons I love the brokerage that I work with, is that I felt special kind of coming into it. And I felt like I was really getting the highest level of value that I could possibly get from every standpoint of that business. And so the same way that I was a little bit reluctant to get my real estate license, I was a little reluctant to get my LO license, because traditionally you cannot use both of them and be effective in the market, right? There's a couple people who brokerages will allow them to do that. And it's really tough because everything is based on you, right? Everything. And so it's already tough enough to build, relations in real estate. And then, the same thing kind of on the LO side. And then what you have to understand is that traditionally, to be successful as a loan officer, you want to feed business to your realtor partners, right? And then in return, they will feed business to you. Now, keep in mind, I've had this conversations with people, and it is a bit frustrating where they're like, well, you already have a team, you guys have so why would I give business to you? Well, I also say that you need to close your deals, right? You need somebody that's competent. You need somebody that works extremely hard. You need somebody that understands the industry. So yes, maybe that ability for you to share and kind of give stuff back and forth isn't going to be as equal. But on the other side, realtors, you can't close your deals without really good loan officers, right? So keep that in mind, not only for myself, but for other loan officers. It's take the opportunity to build relationships. And so that's where I was a little hesitant, because I was like, well, I'm not sure I want to not do real estate. I'm not sure that I want to instead do loans, and vice versa. Right now, there is a vastly different compensation for real estate versus loans. Typically, the way that real estate works is you get to create the amount. Like if you're doing a listing, you get to put the amount that you want on that property as commission, right? Now, typically here in California, that's about 5%. It can vary up to 6. It can vary down if you're doing a very like high level expensive property. You might see that commission based a little bit lower, but it's pretty close to 5%. Now, when it comes to the loan side, that amount is based on the broker that you work with, right? And so as a broker, they get to decide. They're called basis points, but for the kind of to simplify it, essentially you can break it down into a percentage, right? So the kind of best compensation that you'll see is about 1% to maybe 1.25%. That's versus the 2.5% that you would see splitting that 5% commission on the real estate side, right? And so the other determining factor is that when you do real estate, it's based off the purchase price. And when you do loans, it's based off the loan amount. So the purchase price could be $400,000, but they might put $100,000 down. So that means the loan amount is $300,000. And so we're getting, for an example, 1% on $300,000, and the realtor is getting 2.5% on $400,000, right? So there's a varying in compensation that you really have to consider. Now, the big difference here and why you can make good money as a loan officer is that it takes a lot more time for realtors to do their job than it does us, right? Not to say that one is more difficult than the other, but showing properties, managing that whole thing, managing those expectations, there's a lot of work that goes on to the real estate side. I can sit in front of a computer and I can manage 20 loans a month. You're going to be very hard pressed to find a realtor who can, manage even up to, let's say, 5 to 10 deals a month. When it comes to the real estate side, it's just a lot more work that goes into it, a lot more driving. And so you kind of have to weigh those two options for yourself. And I was so new in the real estate industry. And I was getting my license as a loan officer. I wasn't exactly sure what was going to be the best for me. But the reason that I wanted to get my LO license was because of the position that I was trying to create for myself within our brokerage. It's really, we're a growing brokerage. We're relatively small. We're creating a lot of systems to help realtors and loan officers become career, not just part-time and not just like, this is my job, but this is my career. This is what I do for a living. And so I saw that as an opportunity to grow within the company, to take on a vice president position and, really help develop everything from, not just the media side of logos and, pamphlets and all of that stuff, but what does the training look like? What does our coaching look like? How do we provide value to our realtors and loan officers that we're bringing on? That's really more of an operational development side. And I saw the opportunity there, and I thought, okay, to bring the most value to myself and these brokerages, it's valuable for me to have both of my licenses as well as, my education and experience on the media side. I can be the most valuable I could possibly be to my team members. And so that's ultimately why I decided to get my license, right? I mean, all the way up to when I was going to get my license, it was pretty much like, hey, you're going to have to choose one or the other as a working form, but you can have your license, that's fine. And I was lucky to be put in a position to where now I'm able to carry both of them. I can utilize both of them, but it's only because I'm now in a capacity where I am a coach, I am of service. I'm not just a realtor and I'm not just a loan officer, which is fine if you do both, but in my capacity. And that's part of why I wanted to do this podcast, because I'm getting so heavy into the coaching capacity. I thought, why not share this experience as well as take on other people's experience and bring it to everybody? And so I got that license, and essentially what I've been doing since is learning how to do loans, learning how to negotiate for that, how to provide value for our customers. Now, I was in a very advantageous position to where we were doing anywhere from 10 to 20 loans a month when I started. And so I was doing very high volume. We work with a lot of customers that their files might be a little bit difficult. Their credit might not be great, or they might be self-employed, or they might have varying income. All of these things can be a little more tricky, right? The most straightforward loan that you can deal with is, outside of like someone paying for cash, because then you don't have to worry about a loan. But if you are going to get a loan, is somebody that has great credit score, somebody that has, pretty much no hard debt, somebody that has a lot of reserves of money that can afford like a good down payment. And they have all, they're kind of on top of it. They have all their documents ready and all of that stuff, right? W-2 employees, that's kind of the most straightforward loan that you can get. And I've done quite a bit of those, but a lot of people have different jobs, and kind of the areas that we've been servicing, a lot of them have been a little bit difficult. So I've been able to learn how to cater to some of the easiest and some of the best and some of the most difficult of files, and how to make sure that we're closing on time. And my goal was to develop a 15-day close. Right now, that does vary on the market because we have to wait for an appraisal to come through, and sometimes appraisals take a while. We have to wait for inspections to come through, and sometimes that can take a while. But if the market's functioning kind of like at the normal pace, I've been able to now essentially get a file in and get it to a clear to close within 14 to 15 days. And that's a real skill set that's extremely valuable. Now, that can't just be done for those of you that are out there that are like, well, that's the standard in the industry. It's not. The reason I can do that is because I create strong relationships prior. I make sure we do a pre-qualification, then we do a pre-approval. I know pretty much what's going to come back as conditions, so I'm already grabbing those documents before they even ask for us to provide them. We're getting them, right? And that's what makes the difference. And that's unfortunately, that's just something you have to learn. And that's why I was lucky to be able to work on so many files at the beginning, was because of being able to learn how to navigate the underwriting system effectively. And so I spent a lot of time doing that while I was still doing a little bit of real estate, just because at the time I hadn't really had any realtor partners. I was still trying to find a way to earn an income for myself and find my place in the brokerage. And so that was a really fun experience. It was a lot of work because when it comes to real estate and it comes to loans, you have to remember that you do get to essentially make your own hours, which is nice. Like today, I went to the gym in the morning. Yesterday, I went to the gym in the middle of the afternoon. The day before, I went to the gym at night. Like, yes, you kind of got to do that, but you have to remember that you also kind of have a 15-hour day that you're expected to be available. You're kind of like on call, like a doctor, right? Because the way good customer service works in this industry is that you're expected to be working when everybody else is working. And what I mean by that is, for especially on the loan side, there's certain hours that those industries are open and you have to be available to get the file to move forward during those hours, right? There's certain, that's when inspections are being done. That's when appraisals are being done, right? It's kind of a normal 9 to 5 type of thing that you need to be available. But some people, because you're a customer service based, some people are early morning people. So you need to take early morning calls or do early morning files. And most people, they want to look at properties after they get off work. They want to send documents after they get off work. And so you need to be available after 5 p.m. when most people get off of work, right? Now with the way that, COVID has kind of like put people into different places where they're able to work from home a lot more. This has been a little bit easier, I think, for us. I don't think very many people talk about this, but because people are working from home so much, we're able to get documents much sooner, right? Because they're already at home. They just take a minute, go onto their bank and get stuff done, which has been really nice for our industry. But for everybody else, you kind of have to be available, right? Pretty much from like 5 to 9. Now, keep in mind, now this really depends on the individual. This depends on the LO. I do think that it is important to set expectations and it is important to set boundaries, right? You don't want people calling you whatever time you decide, right? If you decide after 7 because that's when you're going to spend time with your family, or that's just when you want to, relax, then you set that boundary, right? Hey, I don't answer calls after 7 or whatever. I had a realtor that I tried to get a hold of who his voicemail said distinctly, I don't answer phone calls, but leave a message. I will get back to you within 24 hours. And I call people back twice a day, right? He puts 2 hours aside a day. I think one was like at 10 a.m. and one was at like 6 p.m., something like that, right? And I thought that was really interesting because he was setting boundaries, but you knew that you were going to get a response of some sort within 24 hours, which is a respectable amount of time. And you could pretty much say that it was going to be one of those 2 time periods. So that was great. But, you do want to be available. The more available you are, the easier your job kind of is because you're getting the stuff that you need. And that's the hardest part of the LO job, is getting documents from your clients, because everything else I can navigate, working with our underwriters and things like that. So, I was doing that. I was doing some real estate, and then we started to bring on more realtors, and I started to get realtor partners, right? And then that's kind of when the decision was made. All right, I'm going to be a referral realtor. I will do real estate for family members and friends, because, when doing real estate, I do believe that it's nice to work with somebody that's trusted, who knows what's going on and things like that. But if I'm going to do the real estate, then I will pass off the loan to one of my other LOs, right? So I'm not trying to be greedy. I'm trying to do what's best for, I think, our overall business as a career. And so I have the opportunity to start working with these realtors that we're bringing on and start to develop some sort of back and forth as coaching. Now, this always started for me in the form of media marketing, brand development, right? And because most people don't really come from that world and they don't understand, right? The question is always, well, how do I start in this industry? How do I make a name for myself? How do I get business in the door as quick as possible? And we believe 100% at our brokerage that the quickest and best way to do that is to get in front of people, right? Um, get involved with community projects, get involved with different groups within the communities, go do door knocking, go to chamber events, go to opening of businesses, and meet as many people as you possibly can and have conversations about real estate. This is, I think, gone to the wayside for a lot of people, and they're struggling and they don't really understand because we have become such a community that is felt that we can make an impact and really, reach out to people through social media and our branding. But the truth is it takes a while to effectively create a brand for yourself. And, you're going to have to wait a while for that to come through. And then that still may not be enough, right? So we really do believe in that person to person experience, starting out as your first 6 months. But also, if you have nowhere to send them, you have nothing to show of who you are. And of course, if you're a brand new realtor, you don't, because you don't have anything you've sold, you don't have anything you've listed, you don't have all of these things that you'll do. Um, you're kind of out of space. So that's where I try to reach out to our new realtors and I say, hey, look I'm a branding expert. I can help you. Let's find a way to to make this comfortable for you and to make it as easy for you to be consistent, right? And consistency is the number one thing that everyone who's doing this struggles with, because for a lot of people, it feels a little unfamiliar, cheesy, and unauthentic to post about yourself all the time, because real estate oftentimes becomes like your identity, it feels like. So we try to help people work through that, right? Creating a strong brand. And once they are able to be consistent, that create a strong brand, then we start to talk about ads, right? Some people want to jump into ads right away, but I'm like, well, that's fine, but you don't have any presence, for them to really reinforce that ad. They want to come back to your Instagram or your Facebook or your website, and they want to see that you have, 500 posts on there, 1,000 posts on there. They want to see you have followers. They want to see that you're providing content and you're creating this ad, and you might get lucky by just the ad. But for a realtor, it really comes down to people really choose kind of how they feel about you. And so we start with the brand development, then we work into ads. And, how to create effective ad sets can be really challenging to navigate, depending on if you're going to do it on Google, if you're going to do it on Instagram or Facebook, or maybe we've even had a realtor who's done a billboards. We want to find the right way to do that for you, right? And so, that's how I kind of start my relationship with them. And then I kind of say like, hey, also, if you need any help on the real estate side, let me know if you're having trouble. Now, understand that we're kind of right at the precipice of our expanding. So eventually I will be doing not only the coaching, but I'll be running our training programs. And I'll be myself, our broker, and maybe a couple other people will be running these training programs, to help people effectively integrate into the real estate market. But for now, it's just me saying, hey, if I can help, and almost always they do need help, right? It's not, and I think for most realtors, it's nice to just have a soundboard, whether it's like, hey, I need help with the contract, or what disclosures am I supposed to be getting, or, what do you have any recommendations for an inspector or anything like that, right? Or how to negotiate this deal, how to, do all of that stuff. And so that's been really nice, because almost always somebody needs some help and I'm there to help. And so it takes me back to kind of my experience of working in nonprofit, feeling like I'm providing service, as well as, I coached swimming and wrestling for 12 years. And so feeling like being back in that role has been really nice, for me personally, and it brings me a lot of joy. And yes, when you're doing the coaching and things like that, because at our brokerage, we don't have any additional fees. We don't have desk fees. We don't have coaching fees. We don't have service fees. We don't have any of that, right? You have your flat split, and that's it. And even that split, a portion of that goes into a fund, and that's something we'll talk about another time when we have our broker on. But there's no fee. So I don't get paid for coaching. I don't anything like that. It doesn't bring me any more money. If anything, I'm probably making less money because I'm doing it. But the hope is, one, I'm providing value, I'm creating relationships. And at some point, hopefully our realtors are going to, push loans over to me, because that's my main business, is the loan side. That's how I make my extra income for the work that I do. And so that's kind of been where I've been for the last, maybe 6 months, is being in that coaching capacity, helping our realtors, as well as, when our realtors have listing, being that media resource. Because like I said, the original reason I got into real estate was because I was doing the media. So I go out to the listing, I do the 3D Matterport walkthrough. I do the photos and videos of the exterior. I do the photos and videos of the interior. And then I used to do drone work, but because of how strict the licensing is now, I don't do that anymore. I'm going to get licensed as a drone flyer, I guess. And so it's just, I've had to take a step back from that because the liability is not, we charge a very low amount for our realtors to use this service. And it would take me like 10 of these properties to earn back the amount of money I would be fined for flying the drone. Right. So, just in practicality, I respect that law. And so I'm not doing it, but I do help create the social media posts for these. We help you cross promote it. We help you create your, your flyers, as well as, if you're going to do your open houses, stuff like that. Right. And so we're a really big resource on that front. And so when I have the opportunity, I'm doing that. I'm doing the coaching on the real estate, and then I'm mostly doing the LO side, and then helping with essentially anything that my broker needs help with in the brokerage. I'm available. That's the biggest thing to me, is making sure that I'm available for my broker when he needs help, because ultimately, in order for all of us to grow, he has to take the head on that, right? He has to take the lead. It's his business. And so by freeing up his time, I give him more opportunity to expand the way that we want to expand, to grow the team that we want to grow. And we're doing it slowly, because it can be very challenging to find people that have the same drive as you and the same mentalities, right? We come at real estate and home loans from a very ethical place. We don't work. We all have to make money. We all have bills to pay. We're not discount brokers or LOs by any means, but we come from a place where money isn't first, right? Service is first. We don't do super high volume. And because of that, we focus more on providing high levels of service for our clients, because they're going to be repeat customers, because they're going to, refer us, and ultimately because it's the right thing to do. So we have to find the right people to fit into that. We're building all these back-end systems that are going to provide a higher level of value to our realtors for free. And then we can put them in the best position to be successful. And we want realtors that are doing 20 deals a year, right? Now, that's not for us necessarily. That's for them, because we think that anywhere that realtors, the average amount is 6 deals a year. We really feel that they should be doing at least 15 deals a year. 20 would be kind of like a high achiever. And that'd be pretty good for everybody involved. So that's where I've been. It's been a really fun experience. I'm excited to see where the next, year takes us. And, I continue to do a little bit of real estate, but really, I'm interested in learning about everything that has to do with the loans and trying to become very competent on that side. And it's not just like, how do you do loans, but it's like, how does the Federal Reserve work? How does that whole back end secondary market work? And how does the economy, not just the United States economy, but the world economy, affect real estate and loans? And rates. And so that's been fun, and that's what I'm hoping to continue to do. So that's me. That's been my experience in the last 2 years. I've really enjoyed it. I love where I work. I love what I do. I have a far better work-life balance, which that's a whole nother thing for a later podcast. David Goggins wouldn't like that, but that's a whole nother thing. So I do want to do a little bit just for any consumers that are out there. These are kind of some of the things that I expect to be asked as a loan officer, or that I hope you are considering asking. And these are some of the key things, because this is how conversations start with the people that I work with, right? I mean, ultimately, I'm going to kind of take a lead and see where they're at financially, where they're at in mindset. But this is the type of stuff that, if you're wondering what should I be asking a loan officer, because they're probably going to be asking you a lot of questions, feel free to ask this. So what type of mortgage is best for me? Now, this is an interesting question, because there could be a couple options that are good for you. It really just depends on what you want to, how much you want to put down, or how much you can afford to put down, or where your credit score is at. Typically, a conventional loan is kind of the gold standard. It can have a relatively low down payment. It's a strong loan in the way that, you're not going to have to deal with any of the worries or concerns of, it's typically a fixed rate. So you're going to have the same payments every month. And you're not going to have to stress about that. Right. And also typically you have to have higher credit to get a loan like that. And so when you're a better borrower, and what that means is, if you have a higher credit score, typically higher would mean like 700 and above, really a kind of a 720. That's a good credit score that, will get you a pretty good rate. Having reserves now, 20% would be kind of the strongest down payment that you could do without putting a ton of money down, because then you don't have additional insurance. But you can put down as little as 3% on a conventional loan. You'll have some insurance on there that can eventually come off, but conventional is pretty good. Now, FHA is also a really strong loan, but typically, you kind of have a worse credit score. There's some additional fees that you have to pay, an upfront mortgage insurance payment that you have to pay, things like that. But it's still a good loan, right? And some people choose to have an FHA loan over a conventional loan if they're kind of like on the border. There's also really strong loans that have to do like a VA loan, right? Maybe you want a VA loan if you're a vet. Maybe you want a conventional loan. Typically, a VA loan is more competitive, but there are certain restrictions and guidelines that are on them. Another really interesting loan is a USAID loan, because that loan is for what you would consider agriculture, and you can get a zero down payment for that, right? And so it will really depend on your circumstances, and that's part of where I'm going to be asking questions, trying to understand where you're at, what you want to put down, what you can afford to put down, how much money you make a month, things like that. And so definitely a great question, but might take a little bit of time to answer until we can get an application in for you and really get all the information that we need. How much down payment will I need? This is a really great question, because there's a huge misconception that the minimum down payment that you can put down is 20%. And that is not the case. The lowest down payment you can do is 3 to 3.5%. Typically like a FHA loan will be about 3.5%. There's some conventional loans that are down to 3%. Again, you need to be a really great borrower for that. But we can get you in right around that. Now, money-wise, here in California, here in Sacramento, it pretty much is about $20,000. That is to cover your down payment as well as cover your closing costs. So the way I tell people this is you're going to put down, let's say, 3.5%. Plus, we want to account for another 1.5% or 2% for closing cost, right? So total 5 to 5.5% of whatever your total purchase is going to be is how much money you need, right? So that's 20 to 30%. Now, yes, there are programs that help with um, down payment, but there's a lot of restrictions on those, right? A good example of that is you have to be like within the median earning of the county that you're in. You can only go so high with the house that you want to purchase. So somewhere around like 300 to 380,000. And there's a couple other restrictions. And so the down payment will vary. We'll be able to tell you, but it isn't 20%. It's that's a good percent to put down because you won't have insurance, but it's not the minimum. You can get into a house a lot cheaper. And that's the most important thing, because sometimes people have that money and they think, oh man, I need another, $50,000. And no, you're ready to buy now. If you can afford that monthly cost, let's get you in there, because the math shows that it's better to own in California than it is to rent. So definitely keep that in mind. What credit do I need to qualify? Again, this depends on the loan that you're going to do, but here's the thing, right? These are basic numbers. 720 is ideal, 720 and above, right? 700 is pretty good as well. Then the next really big you have 650. You start to see that shift. 620 is really the lowest that you want to be. The reason for that is after you go below 620, you start to get additional penalties when it comes to the rate. So now what we do at our brokerage is we try to get you into a loan that's at no cost. And what that means is that to get, let's say right now in this market, a 6% loan, that it's going to cost you no money. Now, the way that the market works is you can get a 6% loan and no money, or you can take a higher percentage and then they'll credit you back money. So let's say you take a 6.5%, they'll give you $3,000. And a lot of times that's the thing that brokerages are doing. And I'm using quotes here to do a down payment program for you. They're not actually, giving their money. They're just charging you a higher rate. They're not really telling you. And then they're getting money back, and they might actually keep some of that money, or they'll use that money to help pay down your closing costs because you don't have enough money. Now, in some instances that might be, just what you need, but in most instances we don't do that, right? So we try to get you a no cost. Now on the other end, if you want a lower rate, it's called buying down your points. And if you want to get a 5.5, it might cost you $3,000, right? And so that's kind of when you get to under 620, you start to get penalized. So that 6% that you would have got at 0%, now you have to pay $2,000 to get the 6% because you're below 620. So not to say like if your credit score is not great, don't get me wrong, you can get into loans lower than that, typically up to like 580. And we can find a way to do. But what I typically recommend is reach out to me. If you're 12 months, 24 months, 36 months out of thinking about buying a house, you're not sure where your credit's at, reach out to me. Let's figure out how to set up a roadmap for you to be successful. Because that's the biggest place that people fail, is they're embarrassed. They know their credit score is not great. They don't want you to really look at their finances. I don't personally care how you spend your money, right? I mean, it's your money. You're an adult. What does matter to me is if you want to get into a house, I can give you some advice on how to set yourself up to be successful, because could save you not just thousands of dollars when you're actually doing the loan, but tens of thousands of dollars over the life of the loan, right? So definitely something to consider as it pertains to your credit score. How do you offer pre-approvals and pre-qualifications? Now, this is interesting. A lot of people don't know that a pre-approval and a pre-qualification are different. A pre-qualification is first, and then a pre-approval is second. A pre-qualification is I can pretty much do a pre-qualification on the phone. what it really is, you kind of tell me your income, you tell me how much money you save, you tell me how much house you want, and I do a general estimate for you based off where I'm seeing in the market of what we can qualify you for, right? Nobody's going to accept that on the real estate side. The pre qualifications are not official documents that do that. Now, there's a soft pre approval, which is where you get all of the required information. And we'll do another podcast on this, but you get all the state and federal required information to do a pre approval. You run the credit, you do all the numbers, but you don't run it through a back end underwriting system that goes through Freddie and Fannie Mac, right? So it's not actually fully pre-approved. It's a soft pre-approval. And then there's a hard pre-approval, which is where you actually run everything through an underwriting system that goes through Freddie and Fannie Mac. This is before you submit it to any lenders. And it will tell you whether they qualify or not based off of everything they have. And it'll give us the exact number. And that's what a pre-approval is. We offer pre-qualifications. I do with people that are not ready to buy now. Maybe they're a year, 2 or 3 years out. We can do a pre-qualification or even a soft pre-approval if we're far enough out to manage your credit with pulling it. And so that's the difference. I know that's kind of like very fast and high level overview, but it's something to understand that one is more powerful than the other. And really every realtor wants a hard pre-approval, meaning that like this is 99% exactly we're going to be able to afford this house and we're going to be able to move forward. And it's the hard pre-approval that allows me to close properties in 15 or get clear to closes on properties in 15 to 21 days. Because we do run a full background on everything. So how will I be updated during the process? This is a really good question. Now, this will depend brokerage to brokerage, but for us, we have a lending program, we have a broker program that you use. So we send you the application, you create your account, you do your application on there. We also request documents through that application. So you're doing everything on there. Then in there, as you're doing it, we're updating stuff on our backends, dates and everything like that. And there's a timeline at the top of your account, and it tells you this is where you're at. This is, this is what percentage we're at. This is the next thing that's going to happen. And this is about how much time it happens. So it's a very nice integrated system where you can see exactly where you are, right? As soon as we, now it does really depend. It really matters that the loan officer is updating this accurately. That way you can do it. But that's one way. The other way is we're calling you, we're texting you. I mean, there's a lot of back and forth with your loan officer that is going to constantly keep you updated, because that's where, and a good loan officer is going to tell you like, hey, we're going to submit these documents. We know how long the wait times are. Typically, we should be getting something back within 24 to 36 hours, depending on which lender you're working on, what their turn times look like, things like that. So you have to be in constant communication with them. If they're not updating you, that's a problem. So make sure that you're dealing with somebody that really, understands how to, communicate effectively with you and is going to keep you in the know-how. Because ultimately, the biggest part of our job is, besides closing your house, is to make this process as kind of stress-free as possible for you, because it can be really stressful if not dealt correctly. Let's see here. Do I qualify for any down payment assistance program? Like I said, we deal traditionally with Freddie and Fannie Mac. We kind of deal with straightforward loans. We do, we're kind of transitioning a little bit into non-qualified loans. And again, this will be on another podcast, but the down payment assistance programs, those really come from not us, right? As a broker, what we do is we're an intermediary for you. So you deal with us, and then we deal with the lenders. We work with every major lender in the country to make sure that you're getting the best deal possible and that your loan is closing on time. Lenders are the ones that offer payment assistance programs, not brokers. We just kind of can guide you like, hey, this is who does offer them. But again, there's a lot of restrictions on them. They work really great for some people, but for most people, they're just not going to work for you because you're not going to qualify. So if that is something where you kind of are a low income individual, you're looking to get into something and you have some money saved, then because you do, even though, no, well, let's not get into it too much. Yeah. If you're interested, reach out, let us know. What is my interest rate? This will fluctuate a little bit, right? Depending on when we it's called floating the loan and locking the loan. So what happens is the market shifts every day. Sometimes a couple times a day where rates will go up and rates will go down. They stay relatively in the same area, but they do go up and down. And so we can't tell you what your rate's going to be until we lock the loan. Now, we try to lock the loan right away, but if we think there's going to be a shift in the market, like if it's just for some reason it went up really high and we're like, it's going to go down a little bit, we might wait a week, look at it over a week and something like that. But typically you're going to know what your rate is within, about a week of your loan being in there, because we have to be able to get you disclosures that tell you, essentially what you're going to be paying and things like that. So that's pretty much the gist of it. Will I have to pay mortgage insurance? So again, if you pay mortgage insurance, so let's do conventional. If you pay mortgage insurance, then only if you put down less than 20%. Now, there's a couple ways for the mortgage insurance to come off. If a combination of your house growing in equity and you paying down your mortgage, where that combination equals 20%, then it can be taken off. It can be taken off, but you have to request it. You have to do another pre-approval. Now, there's certain instances where they will automatically have to take it off. And so it's definitely something to pay attention to. But if you're putting down, 3.5%, it's probably going to be a while until that mortgage insurance comes off. If you're putting down 15%, it could be a couple years. So definitely something to pay attention to. What will my monthly payments be? This is a really great question because a lot of people, they fixate so much on the interest rate. They fixate on the down payment. And they forget that what their monthly payment is. And you have to remember that your monthly payment is not only what your mortgage is. Your monthly payment is your mortgage payment, your interest, your taxes, and your insurance. All of that combined together is what your total payment's going to be. So we get all of that for you. We won't have the exact number until right before we're about to close. But you have a very good, from our pre-approval process, pretty close. We're about within 5%, because sometimes taxes can vary. Sometimes, depending on what time of the year you're there, you might have to put more tax money into there, or sometimes county fees switch and things like that. There's some unknowns that we can't exactly calculate, but that information is there. So that will determine what your monthly payment's going to be. Now, I always try to guide people. I think it's extreme. We call it being house poor. Buying a house and not being able to afford to do anything else in your life. That can be really tough for people. And so I always try to make sure that people understand, like, hey, this is what, it's not just your mortgage. It's called the PITI. This is the total amount. And then also keep in mind, if you're in a, let's say you're in HOA, there's the HOA fees, but keep in mind you have sewage, you have trash, you have gas and electric. That can add up anywhere to $300 to $400, $500 additional a month. So you might be thinking, this is where a lot of people, they get buyer remorse. They forget that all of that stuff's in there. Maybe they think it's not going to be that much, because a lot of times some of that stuff is covered in renting. It's built into your rent, that they're like, wow, like, okay, I thought I was going to be paying $2,500 a month, but I'm closer to $3,000 a month by owning this house. And the other thing is, a lot of people, houses don't come with appliances like a refrigerator or washer and dryer. You got to buy those. You're buying a bigger place. You need more furniture. And on top of that, now when your house messes up, you have to pay for it, right? It's your house. You're responsible. So, the monthly payment's there, but I kind of go that extra mile for people to make sure that they understand there is some other stuff you need to consider. If you haven't, if you have, that's great. But if you haven't, definitely keep that in mind. And I think that's going to be it for today, guys. I mean, there's a couple more, but I think, we're almost at, our time for the podcast. We've really kind of hit a lot of great points. Definitely some stuff to consider if you're talking to a loan officer. And sometimes realtors can answer some of these questions if they've been in the market a long time, if they're knowledgeable, but ultimately, your loan officer is the person that you need to be talking to. So I want to thank you guys all for being here. 2 years. I'm really excited. I'm happy with the choices I made. I'm happy that I get to help people, get into homes, every day. And so thank you guys very much for being here. Again, this is the Hard Money Show where we talk about real estate, home loans, and media. And you guys have a great day.